Hello students and welcome to the lecture. So students, as we know that we are covering the financial system, and basically in the financial system we had the topic which we called as an Indian banking system. Okay. In Indian banking system, basically these were the topics we had scheduled for learning. All right. Like generations of banking. Okay. Thereafter, banking sector development 2014 onwards. All right. And then we left with the risk in banking. Okay. So this topic we had completed. This topic we had completed. Now this one we are left with risk in banking. Okay. And in the risk of banking, basically we had started the discussion and we had covered several type of risk. Okay. So I'm hoping that you have revised all the previous lectures in a well enough manner so that now you are able mentally that to connect the dots which we are going to study now. Okay. Because remember, before starting this series, I had told you one thing, that we are going to practice the past, connect it with the present, take it to the future. Okay, that was our scenario, past, present and future. Okay, so I hope that you have connected the same. All right, so if you're revising the previous one, means the past, and then you come to the lecture, means present. So when you will go to your exam, means in future, you will have a better understanding. Okay, so we had finished till there, like the implementing robust risk management framework to identify and assess and then mitigate the risk which are associated with interconnected lending. We had seen the enhancing governance practices which to ensure the transparency, the accountability and effective oversight of the lending activities. Okay, now in this particular area we had a word which we called as a regulation versus governance. Okay, first we will just look at the formal definition. I have put it here, then I will detailedly explain you the difference between the regulation versus governance. Okay, so first start with the basic definition. While the regulation plays a crucial role in the mitigating risk in the banking sector, it cannot substitute for good governance. Alright, it means that, however, the regulation having its own crucial role to play in the risk mitigation during the banking sector operations, but still we cannot say that it is a substitute for a good governance. Okay, there is no particular example for it. Okay, substitute for a good governance. Secondly, effective governance practices including strong risk management, transparent reporting and independent board oversight are essential for ensuring the long-term stability and resilience of banks. Okay, so basically what is written down here, that effective governance practices are essential, however we already have the regulations. Okay, so here we have the two main words. The first word is the regulation. Second word is the governance. Okay, so now what do you mean by these words? What is the meaning of the regulation? What is the meaning of governance? Okay, and let me tell you one thing, that they both words are very much interconnected but also different. Okay, these words are very much interconnected but also different. Okay, so let's first understand these words, then we will be able to understand the interconnectedness and therefore the difference also. Okay, so basically if we go by the regulation, so what do you mean by the regulation? Regulation is basically the set of rules and regulations, okay, which are designed and implemented by the you can say designated authority. Okay, this is an word regulation. Got it? Second term here signifies the you can say governance. Okay, so what do you understand by the governance? So governance in particular is a set of rules and regulations as well as internal policies of an organizations. Okay, so these are the two terms. Regulation is just a set of rules and regulations. You can say like SEBI. Okay, SEBI is a regulator of the stock and securities market, right? And how do we say it? Because we know, but governance is basically the broader term. Why? Okay, just on behalf of SEBI, you can take it RBI, for example, so that you could connect it better. RBI. So RBI is basically, you can say, regulator of banking and financial institutions. Okay, now if you look at the RBI, or if you look from the RBI's perspective, RBI provides the rules and regulations, and then the banks and the financial institutions are you can say required to operate or follow as per the provided rules and regulations. But when it's come to the governance, in addition to the regulations provided by the RBI, banks' internal policies also included. It means that it is from both sides. It is not only focused on the regulator's policy or guidelines, but also from the governance point of view, and they both combine to form the C. Okay, this is a scenario. Got it? So that's why regulation is a smaller term when it's come to the governance. Got it? That was the reason. Okay, now come back to the question which we had just seen. Interconnected but different. Why interconnected? Because they both are for the control and for the monitoring. Both are for the controlling and the monitoring. So that's why they are interconnected but different. Why? Because it's considered only the one side perspectives. Okay, governance basically two sides perspectives. Okay, remember this thing. So interconnected but different. Got it? Now let's move forward. If we look at the conclusion part, interconnected lending and the lax governance norms pose significant challenges to banking sector, increasing the risk of contagion and financial instability, as we had just seen in the previous lecture also. Is necessary to address these challenges and enhance the resilience of the banking system. Okay, so after finishing this particular risk, now we having the main particular risk in front of us. which is known as the challenges faced by the SMEs in the re-globalization world. Okay, so here are the two main terms. Okay, SME, and thereafter we call it as re-globalization. Okay, so what do we mean by these words? It is very, very important to understand before go further, because these are the, you can say, basics. Okay, and if we are not able to start with the basics, we're not able to go to the advanced. So first we will talk about the SME. Okay, so starting with the definition, SME stands for small and medium enterprises. Okay, so SME is basically a small and medium enterprises. If we talk about the small and then the medium, okay, for small, initial statement is 1 crore and revenue must be up to 5 crores. Okay, for medium, investment up to you can say 10 to 15 crores or 20 crores. Revenue is considered up to 100 crores. Okay, however, please note down that these figures are not static. Okay, I'm not claiming that these figures are static. If you do a Google search, you will find a different values in terms of the investment and the revenue, but here I just tried to put you in the correct direction. Okay, it is a you can say medium range or mid range or middle range, you can also say, to classify the small and medium enterprises. Okay, so these are those enterprises which are not so large, and these are generally the small nature or the medium nature. And why these are important? Because remember, in the previous lectures also I had told you about the LIT and the CIT. LIT and the CIT. LIT means labor intensive technology. Okay, CIT means capital intensive technology. Okay, about it I had already told you in the previous lecture, so I'm not going to start it with it, but these are used here for the reference. Correct? So the small and the medium enterprises are basically focused on the LIT. All right, so these are very, very important from the employment point of view. Okay, and also before economy point of view. Okay, so first thing we have just signified here about the SME. The second was the term re-globalization. Okay, so about globalization we had already discussed in the previous lectures many times. All right, it means the international trade, right? And which is the biggest organization of the world which controls the international trade? The answer is World Trade Organization. Also known as WTO. Okay, World Trade Organization or the WTO is basically the organization which controls the international trade. Okay, And globalization is also the international trade, but the term reglobalization here is used for opening up of the market once again. If again we are opening the market, it means that the market once closed. Okay, that was the significance, but not in a full sense. Okay, closed market, you can say, due to some geopolitical reasons. Okay, due to some geopolitical reasons and ambitions, basically the trade between the countries got affected. All right, that's why many of the trades were closed down, many of the trade channels were affected, and then we used the word reglobalization now, because right now we are trying to ameliorate the damage caused during this time period. Okay, so I hope now the SM is clear to you and the reglobalization world is clear to you. Okay, so let's begin. Just take an overview. The reglobalization of the world, driven by the geopolitical shifts and the proliferation of free trade agreements, FTAs in short, presents challenges for the small and medium-sized enterprises. How? I will tell you. Okay, these challenges are exacerbated by regional ambitions that can impact SMEs' competitiveness and access to the market. Okay, so basically what we had seen that due to the term we call as FTA or the free trade agreements, this is a challenge for the small and the medium-sized enterprises or the SME. Okay, so first of all, we have to understand the free trade agreement. Like, what is the meaning of this particular area or term? Okay, free trade agreement, in short, famously known as the FTA. Okay, so suppose basically there are two countries, A, B. There are two countries basically, for example. All right, now if the A want to trade with B and the B want to trade with A, it means that their traders and merchants now want to get indulged. So what do you think? Will there any trade barrier? Answer is yes. Taxes, custom duties, excise duties, trade infrastructure, facilities in A are different from B. Alright, it means that if they want to do a trade with them or with each other, they require a common policy in order to protect the right of everyone or each and everyone. Alright, that is what required here. Got it? But what generally happen, the countries also reserved the market for their own companies so that their business could work. Alright, but when we come to the free trade agreements, then it is a open trade. This is an open trade. Why? Because there are neither any restrictions on the foreign companies nor any backing for the domestic companies. Okay, you can say now neither we are supporting the indigenous companies and nor we are restricting the foreign companies. It means that it is now the open market. Who perform well will get the chance to expand the market. Who perform low will exclude it from the market. This is the condition. So why it is a threat for the small scale industries or small and medium enterprises? Because these you can say organizations do not having a sufficient manpower, technology and the capital to compete with the foreign players or the outsiders. Because if any entrepreneur or any company is able to expand outside of A, go to the B, C, D, E, whatever country, it means that that particular organization or company having the strong workforce, having the world-class technology and having the huge capital so that they could bear up the expenses. Got it? But when it's come to the SME or the small and the medium enterprises, these are generally you can say restricted to this one country or even towards the one district or regional areas sometimes. Alright, so when the foreign players entered their market, so there are chances that these companies will lose their customer base to the outsiders. Okay, that's why this is a threat. Okay, because now under the free trade agreements there is neither support for domestic company, neither support for domestic companies nor restrictions on foreign brands. Okay, which means that these are now open trade. Got it? So keep this thing in your mind. These challenges are exhibited by the regional ambitions that can impact SMEs' competitiveness and access to the market, because before the FTA, the regional ambitions are protected. It means that the regions in which the SMEs are operating, they are under the support by the government. But after the FTA, they have to be competitive and have to be in accordance so that they could get the access to the market, which is to be hindered by the entry of foreign players, or you can say the dominant entities. Okay, so first is the increased competition. This is the first threat. FTAs can lead to the increased competition from foreign firms which may have access to the larger markets and lower production costs. This can put pressure on the SMEs to remain competitive. Why? Because as I have told you, if someone is able to come outside of his country and do the trade here, it means that this particular organization is having the strong domain. Okay, and when they have the strong domain, they will try to capture a significant share of the market. Okay, in order to protect its share and the presence, these small and the medium enterprises must be remain competitive, because first of all they having the limited capital, and even they are, you can say, rely on the labor intensive technology, which means that their work is slow, there are chances of mistakes, and third, the cost of production is higher in comparison with the capital intensive technology which is present with the foreign firms. Okay, so this is the first challenge. Market access. FTAs can also create opportunities for SMEs to access the new markets. However, SME may struggle to navigate the complexity of international trade and comply with the regulatory requirements. Now here you can say, suppose there are two countries, A, B. Okay, when the firms of A get the access to firms of B, similarly firms of B will get the access to A. It means that when the foreign firms enters the Indian market, or you can say this market, so its domestic firms will also get entry to country's A market. Okay, so this is an opportunity. Got it? But there is another scene which is called as a navigation through the complexity of the international trade and comply with the regulatory requirements. Okay, like if we talk about the foreign players and others who are entering the market, there are chances that they are well aware about international trade. Okay, so that's why they could easily navigate the situations. But the firms which are smaller in size, okay, which we also get as a medium and the small enterprises, these firms may not able to meet up, or you can say comply with the international rules. Okay, so this could create a problem for them. All right, so remember this thing. Now, supply chain disruptions, what do you mean by it? Geopolitical shifts and regional ambitions can disrupt the global supply chains, affecting SMEs that rely on the imported inputs or export markets. Why? Because of the geopolitical shifts. Okay, the large industries could manage it, okay, because they having the enough and the sufficient capital to diversify their portfolios and the manufacturing units. But when it's come to the SMEs, which having the limited capital and the resources, they could not shift their locations that easily. All right, so if there any disruption in the supply chain, which means that the SMEs that is rely on the imported inputs or the exports market will be affected too. Okay, risk assessment. Banks need to carefully assess the potential risk faced by the SMEs in a regularization world, because banks and the financial institutions are directed or instructed by the authorities to provide the finances and the support to the SMEs. So when the bank made the investments in the SMEs and backed them, SMEs failure will also affect the bank, because now the bank is the investor of an SME. Okay, so remember this thing. Banks need to carefully assess the potential risk faced by the SMEs in a globalization world. This includes evaluating the impact of FTAs and regional ambitions on the SMEs operations, supply chains, and access to the finance. Cash flow management. Banks should work with the SMEs to develop robust cash flow management strategies to mitigate the impact of the potential disruption. Okay, may include the diversify suppliers, optimizing inventory levels, and exploring alternative market. It means that it is the responsibility of bank to ensure that the SME is not rely on one source only. Financial planning. Banks can help the SMEs to develop the financial plans that take into the account potential changes in the market condition and the trade policies, so that they could work accordingly. Help the SMEs better preparation for the fluctuation and demand and pricing, so that they could ensure the smooth functioning. Access to finance. Banks should ensure that the SMEs have the access to the financing, okay, to weather the potential disruptions. May involve offering flexible financing options like the working capital loans or the trade finance facilities. Okay, about working capital and the trade finance facilities, I had already told you in the previous lecture. Okay, now if we talk about the conclusion, the reglobalization of the world presents both challenges and the opportunities for SMEs. Banks plays a crucial role in helping the SMEs navigate these challenges by assessing and preparing for the potential risks, supporting cash flow management, and ensuring access to the finance, which we had already discussed and seen in a well enough manner. By working closely with the SMEs, bank can help them remain competitive and resilient in a rapidly changing global economy, because whenever the outsiders and the foreign players enters the market, they bring some challenges. Okay, and to face these challenges, it's basically related with the changing global economy. Okay, so that's why it's a responsibility of bank to make the SMEs competitive enough so that they could bear the changes generated by the foreign players through the FTA and all. Okay, so students, basically in this lecture we had completed the Indian banking system. In the next lecture we will start with another important topic. Till then, just revise all the facts and figures we had discussed in this lecture. Be ready for the another lecture. Those with this note, let's end this lecture, and what we say thank you.